Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 3rd of June, 2023, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the first week of June. And as we see across these three majors, they were all making a significant recovery after falling the last couple of weeks, and until Friday with Euro and the cable pulling back slightly, except for the Aussie dollar, which only had a smaller pullback. And that's due to the non-farm payroll report, which was stronger and better than expected, which surprised the market significantly, and that could cause additional data for the Fed to possibly increase rate one more round. Market was already hoping that they would pause in June in a couple more weeks, but now this is additional data for them to ponder over. And we will see whether this is inversely correlated against the US dollar. And we'll take a look first at what were the key drivers for last week. Actually, it's only the main one was the non-farm payroll report yesterday. And take a look ahead for this coming week, see what additional fundamental drivers there could be. All right, we start off the week with a stronger US consumer confidence figure, and but it was actually dipping lower from previous months, even though the forecast was fairly conservative. That was due to concerns with the debt ceiling, but that's been resolved now, so that should alleviate the situation. The Australian CPI surprisingly came out higher than expected. Well, perhaps not surprisingly, as UK did the same as well, and the US still staying quite high. Only the Eurozone CPI dipped lower than forecasted, and of course the US ISM manufacturing is still contracting every month and still below the 50. And which we'll see, we'll compare this with next week, Monday, with the services PMIs. But the main highlight last week was the NFP with a significant number of jobs added, 339 versus 193. And even though there was a significant amount of jobs added, surprisingly, the unemployment rate picked up slightly higher, which maybe could be need additional figures from the total pool of available jobs, and as well as the labor pool. But yes, this was a surprising figure that popped up higher. And this coming week, there's not much news from the US. It's only the ISM services, which is always strong. And the forecast this time is back up higher again compared with the actual for the previous month. And this week we'll focus on the Australian economy with the RBA perhaps pausing. That's the consensus, but with CPI higher, and they did already pause one time, so we'll see whether there's they'll pause again after the last increase. So this is questionable one. We'll see how that will impact the the Australian dollar, and as well as the following day with a lower forecast now for the GDP. So the outlook for the economy is not as strong as the early part of the year. So we'll compare this and see how that will impact the Australian dollar in the analysis. So let's move back to the analysis. Let's begin with the euro. It did dip on the Wednesday as it was trying to find support above the daily 200 EMA. But then dipped on the Wednesday and did hit the 78.6 fib retracement, and then made a strong recovery back up into the resistance zone. And on Friday, it did attempt to continue climb up higher, but then the non-farm payroll report spoiled the progress here. And we look at the perhaps the shorter time frame on the 4-hour. Let's see where it has been consolidating and attempting to climb higher, but then once the US data was released, it has faltered and falling back lower. Now, let's see if the daily 200 still is able to hold, because that's going to be a critical support now as it did dip to hit the 78.6, and that's going to be the major support here. And it needs to, if it's going to recover, it needs to climb back up above this resistance, as well as the 50 fib and the 108 round figure, and additional resistance at the daily 55. So it needs to make a strong recovery if it's going to climb back up significantly. Otherwise, there could be perhaps a bearish test if it breaks below the 78.6 at the 106.40 area, and it could attempt to test the swing lows. So critical stage and before the ECB rate decision the following week. So this is going to be interim resistance here, as well as the 38 fib. In fact, the 38 fib is can be considered a significant resistance now. That's at the 108.74 area. And let's remove this for now. 110, that's too far, too high. On the weekly time frame, it's closed as a doji right at the weekly 55 EMA. So this is critical this coming week. It needs to recover back up and clear the 108 here. Or there could be a continuation lower and it breaks this 78.6. That's going to be a very bearish outlook. So critical week for the euro. It could just consolidate as well this coming week ahead of the ECB next week. So could just consolidate between the high and low of last week. Okay. Let's compare this with the US dollar index, the DXY. See if it's inversely correlated. And here's the DXY. And after spiking through the 104, it was attempting to continue higher. After finding support at the daily 200 EMA. But then after Wednesday, started to retrace lower and a significant drop on the Thursday. And then dip back into the 103 level, hitting the 103 before finding support on NFP Friday and climbing back up to close back above the 62 FIB retracement at and closed at 103.63. So that's a significant recovery here. So still there's hopes of further recovery back up, and because it closed back above the daily 200 as well and the 62 FIB, there's still hope for continuation, and it needs to break above the 104 to attempt to test the 786 retracement at 104.40. So this is still an interim support level at the 62 FIB. And of course, the 50 FIB is a strong support right at the 103. And making its way up is the daily 55. And on the weekly time frame, as the euro closed as a doji for the week, the US dollar index closed not quite a doji, but a spinning top with a longer lower wick. So it could also consolidate this week with between the high and low of last week. And it's difficult to see if there's going to be a potential break back above the 786 or break down below the 103. So and this week there's only ISM services PMI on Monday, so it's not many news events to watch out for. So more than likely there could be just consolidation for next week until the following week with the FOMC meeting coming out. That will provide the impetus or fuel to either break out higher or break down lower. So unfortunately, it could be a consolidation week this coming week then, with the lack of news. All right, let's move back to the other pairs. Let's move on to the cable, as it has been on a fairly reasonable recovery after testing the 786 retracement and has been climbing up since the end of the previous week, and it continued quite strong after pushing through on Thursday, pushing through the 125 round figure. But then with the NFP news, it fell back right into the 100 FIB swing high, previous swing high area. But still overall, still above the daily 55 EMA, where the interim support is. And we'll see if that will hold this week. On the weekly time frame, it's still very good bullish close for the week with a smaller upper wick with what looks like an inverted hammer, so there could be some continuation move. So it looks better than the euro. Still on a bullish recovery here, although it closed back below the 125. So if we look at the shorter time frame on the 4-hour for yesterday, that's the impact of the non-farm payroll numbers, and that dropped it back down into previous swing high. Right, and there's no UK news this coming week. It's just like exposed to the ISM services PMIs then, and we'll see if it's able to climb back above this trend line. It's going to be a significant trend line that needs to climb back over. So 125 is still a strong resistance here. This is now going to be an interim support at the daily 55. And 123 as well is at the 786. The interim support, and this will be the key support here at this previous swing high and the daily 200 coming up for support. All right, so let's see what the price action is for this pair and this sterling pairs for this coming week. And as just like the central banks, the Bank of England is only going to have their meeting in 3 weeks' time. So it's going to be a week after the ECB and the FOMC. So there's still a lot of time for significant price action before that with other news. All right, let's move on to the Aussie dollar, where this is a strong recovery from the 65 round figure. Started on the Thursday and then continued on Friday with a slight pullback due to the NFP on yesterday, and it's also did hit the previous resistance zone, so support and now resistance. So if we look back, that's the also previous swing lows and then support, and until it's fell through, and now it's back up to resistance again, and it hit that precisely before closing at just above the 66 area. So major resistance up here at the needs to clear the daily 55 and the 62 fib on the shorter swing, and needs to clear this major resistance zone at the 67, 50 fib and the 786, all aligning here. Major support is still going to be at the 65 round figure. And for now, we also have an interim support here. Let's mark this one here, interim support at the swing lows here on the shorter time frame and the longer time frame. And that's around the 65, 60 to 70 area. So big news for the RBA on Tuesday, where consensus says that they may just hold the recent increase after was an increase, then a pause, then an increase again. So it could be a pause again this round, but there's a lot of data to say that inflation is rising, and I'm not sure whether they may attempt to increase one more round, or they could wait for another month and hold. So let's see how this will impact the price action. So this would be the range for next week, and it could as well just consolidate. If it's not going to break out higher, it just consolidate around this 65.50 area, right in the middle of the zone. On the weekly time frame, it's a fairly strong piercing line here, so it does need to break out higher to continue its recovery after 3 weeks of retracement lower. Okay, and then on Wednesday as well, there's also additional data for how the economy is doing, and they've already forecasted a lower GDP figure. So we'll see if there's going to be any breakout, or just like the other pairs, it could be just consolidation, and depends on whether the RBA surprises and does increase rate, then it could be a strong push higher. All right, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.